Alright, I wanted to do a follow-up video to hopefully explain a little bit better because this is pretty important. Most of you have never seen this before in your lifetime, so it's important you folks see how this affects your trading for here on in the future. Because if you can understand this, you are set up to make a lot of money years to come. So what I did here is for strictly teaching purposes, I have here the SPY. Okay, this is a 10-year weekly chart, but I have it zoomed into the last 5 years, starting for towards the end of 2005. Okay, right here. Now this pink line is the VIX, the VIX. Okay, so on the left side here, you'll see the price of the VIX. Okay, this pinkish purplish line is the VIX, and on the left hand side, you'll see the value of the VIX. The blue and red, of course, is the SPY, and on the right hand side, you'll see the prices for that. Okay, I want to double check, make sure I have this set to logarithmic pricing. Yeah, log scale. Okay. All right. So what I want you to see is take a look when you look at the last 3 years. 1, 2, 3. You see the VIX right here? Look where it's average. If I kind of draw a line right here towards the middle a little bit, follow the crosshairs to the left, and you will see that the VIX has been averaging, the mean is about 13.5. Okay, you can see how low it's got. Now this is a weekly chart. That means every tick in here is a week. All right, so it's gotten down to as low as, God, I don't know, 11. I've seen it down as low as 10. If you see right here. The reason why that's important is look what's happening as the VIX is low, right? Of course, you can see the SP5 is just rallying up, right? That's the SPY. Now, I'm gonna pull back. Now look at, even if you go back as far as 2005, but even if you go back a little bit less, like here, let's look at 2005 through 2011, or even 2000. Well, there's a high volley after 2008. So let's start with 2000. Well, what's the best way? See how high the VIX shot up in 2008 when we had that crash? All right. So for the VIX to have a reversion to the mean, it had to get low, right? And sure enough, look how low it got. All right. So if this is the high up here, right, and we've gotten a low down here before, right, when the market was going up, the mean was right around in the middle, right? The average is right around here, around 2019 to 27, somewhere in that. Well, 19 is already down here, but somewhere in that 25 range. Okay, so for us to get the VIX to average back around here, what's got to happen? The VIX has got to, it almost has to double, right? Because if the average of the VIX was around here, 13, and we wanted to get it to about 20, between 21 to 25, for the VIX to revert to the mean, which is above here, right around here, right? We've got to have a lot. The VIX has got to stay, okay, a little bit above that, right, to bring the average up. So the reason why that's important is what that means is good trading opportunity. Because take a look at what happens when VIX is kind of in that median, all right? And look at how the stock market traded, like right around here. I'm going to try and keep it highlighted in pink. Right, as you can see, of course, the bull market started from 2009. It kind of just shot up. You know, this is a weekly chart, but if you can have VIX kind of high up like this, you will see, like, especially like around here, if you can look, there's a lot of blue and red mixed up. Now, if I switch it to the daily chart, it'll be a lot easier to see. So I'm gonna click over here. Now we're at a 5-year daily chart. All right, and I'm gonna switch my study here to make it easier. Let's go to load study set. Let's just go to IV rank only in the SPY, and then I'll add the VIX on it. So I'm gonna go to studies right here. I'm gonna add a study. You guys can see how I do it. Now I'm gonna add a study right here. I'm gonna go to the C's, all studies. Okay, I'm going to drop down to the lower C right here. I'm going to go to compare. Whoa, crap. Sorry, my bad. Going to go to comparison. Okay, right here. I'm going to click that. And the SPY will automatically start lining up in pink. So what I want to do now is I'm going to go to studies. I'm going to go to edit the study. I'm going to hit comparison right here. I'm going to click this gear. and I'm going to change this to VIX. Okay, oh whoops, VIX. I'll make it pink just so you can see, and if you want you can make it to a bar chart as well. I'll hit OK and apply right here, and here's the VIX. Okay, so perfect. Now take a look at how this chart looks. So I will scroll. Here's 2012, of course. Here's 2015, where we are now. So you can see the VIX shot up way the hell up here. See right here. Okay, but we need that because we need the VIX to kind of average right around here, this area right here. Because kind of take a look when VIX average around, I don't know, Karen the Supertrader likes VIX around 19, which is right around here. Okay, because as you can see, when VIX is around 19, right around this area, kind of see all the different blue and reds in between. I guess I'll just zoom in like right here. When VIX was around 19, 20, right around here. See how the market just kind of, it's a very good two-sided market. You know what I mean? You can trade it. That's what we want. So we want VIX to average a little higher. But as you can see, just because the VIX goes up doesn't mean the market will stay down. You'll see there. See, of course, look, VIX was at 22 right here. Okay, right here, VIX was at 22, and we still had an up and down market. See that? So that's what we want. That's what we mean by reversion to the mean. Now, here's where I want you folks to be careful. Watch today's market measures over here. I put up some stuff, not the market measure, but today was a great episode to watch Tasty Trade on because they changed their program. They just concentrated on everything on today's market. So if you'll see here, you should watch these 3 videos. Okay, opening bell they did, what else you got, and market measure today. All right, it'll give you some great as how to manage your positions. Now, what you hear Tom talk about is when you trade the SPY. Let's go to 53 days out right here in October, and you go to the bid-ask spread. What he's telling you to watch out for is let's go to probability out of the money at like 84%, which is like 1 standard deviation, right around here. Okay, like the 154. Look at the bid-ask spread, 168. It's over $1 wide. Okay, so that's why if you watch all those videos, you notice Tom them didn't put really any new trades on. They basically scalped bonds and whatnot. Why? Because there were 2 lock limits, meaning they shut down the market twice today. Okay, just to allow the market to kind of catch up because it was just like a free fall. And then there was so much traffic that a lot of the not just Thinkorswim, but all the trading platforms just got all bogged down. So hopefully you'll see like the SPY is up, you know, after hours pre-market. Let's see what happens, and you'll see this start to close. All right, and once this bid-ask spread starts to close, you'll be able to trade. You can start placing some trades that'll be a lot safer. Okay, so the reason why you don't want to put on with these spreads this wide is if you're selling the bid for $1.68, for you to make a profit, you have to buy it back lower than that, right? Well, the ask is what you have to buy it back for. So right now, if someone is buying the 154 straight, they got to pay $227. So if you sell the $1.68, you've got a long ways to go before you can buy it below this. If you always have to buy the asking price. You always sell the bid, but you have to buy it back at the ask. So that's why you don't want to do a huge wide spread like that. That's just because, you know, it's a crash and it happened real quick. Not over a month. It happened in like 2 days. All right, so that's what you want to wait for that. Now, if you look at here, you'll see the SPY here. IB rank is still at 100%. If I type, we can look at aftermarket, which is, I'll go to the 15-minute chart. It's the highlight area. As you can see, aftermarket, we closed around here. Aftermarket is climbing up a little bit. The best way to look at that is /ES, which is the E-minis futures. And here it is. You will see here that, what should I show you? Oh, maybe I can show you SPX. Whoops. Oh, crap. Yeah, I know, dummy. SPX. Will it show us? Will it show us? Will it show us? No, let me look at the chart real quick. Here we go. Yeah, as you can see here, the E-minis are up 2.31%. Everything's up almost 2%. Okay, this is after hours of pre-market, I guess after hours. So you can see it right here. So that's a big jump. So it's up to 1914 SPX. Well, it's not going to show you that, but anyway. So it's making a nice little bounce here on the ES, the E-mini futures. So I'm going to watch that in the morning and see what happens. Okay, when that happens, you'll see vol start to contract, and premium will come in, and that's when a lot of your position will start to come in. Okay, so I wanted to clarify that as well as what to look out for, and also what videos to watch, because this is, and you should bookmark this and save it because it'll help you out a lot. If you folks had on golden geckos prior and you were trading with vol was at, IB rank was at 20%, you got challenged. You've got to bring in your call side and keep your naked side where it's at and trade around that. But if you just watch the videos, it's best if you do that. It'll help you out. And if I need to go into more detail I will. But basically, let's see if I can. If I go this, my chart will be better probably. Let's go to SPY real quick, and I can kind of, I don't know if I can show you in this paper trade account. Let me see what I can do here real quick. Switch it to the daily. We'll go to the trade tab. So let's say you had something. Well, let's say you had some September positions on. And this is not, it's going to be hard to show. I got to use dough. But anyway, what you'll see Tom talk about is if you've got put spreads on, and of course you got tested, right? You want to leave those. And if you got your call side on, you want to roll your call side. Well, of course your call side has profit. So you want to close and reopen positions, he said closest to at the money. And if you watch the video, he's not doing it now. Look at the call side. The bid and ask spread is a lot closer, right, than the put side. But he said if you watch those videos, he said he's not going to do it now. Watch, he's getting ready to set those up. So I think the best thing for you, especially if you're new, go here and watch these 3 videos in a row and context. Okay, so you can see what happens for you in the future. What to expect in the future. And this is a really, really, really good market measure. Okay, but the reason why I did want to show you this chart is to show you what you can kind of look for to expect as this market corrects itself and brings everything back to the norm. Now I'm thinking, to be honest, this is a 5-year daily chart. I mean, we have, I'll zoom out real quick. This could go, this is ugly. This could test here easy. See this right here? This is back in January of this year. We're not even down there yet. And this is that 233 moving day average right here. I'll zoom in right here. For you technical people, well, I'll pull up the technical chart. Okay, so take a look. And I'll zoom out again right here. And I'll zoom in from here. All right, here's the SPY. Okay, here's this crash down in October, down here. Sorry, I should take away the volume real quick just so you can see better. Take away the volume so you can go to equities. Take off that. Okay. There you go. So as you can see here, we got down as low as, geez Louise, what is this? We got down as low as 180, 181 approximately. All right. We're testing, well, hold on, let me scroll over. Yeah. We're at 189.55. We're testing that, God, we almost tested that low. All right, but that's just October. So that's just here. We could go way below that. How do I know? What makes me say that? It's because let me just. But there are way more sellers than buyers. Okay, we're starting to see this pop up a little bit, and as you can see, Ivy rank will collapse, but it's start hopefully starting to collapse.